Hi everyone, it's Paul Brown here from Wealth21. Hope you're all doing well. Put together a market update just for the first few months of 2023. And so far in this calendar year, we've had kinder conditions for investors than we did in 2022. So firstly and importantly, anything in this video is just general information only. If you've got any questions about your own specific circumstances, please give us a call or seek advice from an authorised financial advisor. Let's start by having a look at the index returns to 31st of March 2023. I don't have the 30 April figures yet. But for the first quarter of the year, what you see is that, particularly over the past 6 months, there's been quite a few good returns for a lot of the different sectors through that 6 months, and that's because in September last year there was a dip in the markets, and that was one of the low points. So in the 6 months since that point, there's been quite a recovery in virtually all of the markets, actually bonds, property and shares. Although over 12 months you can see that there's still some negative returns in global bonds and also in Australian listed property and global listed property infrastructure. There's some currency influence though, of course, because all of those global assets are hedged to Australian dollars. So over the longer term though, over 5 and 10 years, you sort of get the results you expect where shares and property produce the better long-term returns over the longer term, and cash and bonds have lower returns. Moving now to just looking at the index returns for conservative, balanced and growth. And again, you see pretty reasonable results over 3 months and 6 months. Over the past year though, whether you're a conservative investor or a growth investor, your 1 year return at the end of March was more than likely still negative. Again, over the longer term, you see favourable returns, depending on the level of risk, and all well above inflation. And obviously, the cash rate over 5 and 10 years hasn't really beaten inflation, so cash hasn't been a good investment over the longer term. Short term, though, it's been good to some extent, although inflation has been very high. So let's look now at interest rates. And this is it's a 10-year chart of Australian interest rates. And so we saw pretty much from, interest rates reduced right down to zero due to COVID, sort of from 2020 onwards, virtually down to, I think it was 0.1%. And then in May 2022, the Reserve Bank, with inflation emerging, increased interest rates very aggressively, and we're up to 3.6%, although we had a pause in those rate rises last month. This chart here is something that I may have shown you if you've come into the office. This is sort of like the cash rate futures, if you like, and this chart, like if we'd have looked at it 6 months ago, it would have had the interest rate rising up above 4%, 4.3 I think it was at that point. But now with inflation it's seemingly starting to moderate, this chart is showing that interest rates, like the peak of this is 3.7% versus say 4.3% 6 months ago. And it shows that, we may have another 1 or 2 rate rises, but it seems as though the interest rate cycle is nearing its peak, based on this chart anyway. Now, this is the 10-year bond yield, a chart. I think this goes over about 5 years, and the 10-year bond rate obviously was very low, less than 1% during 2020, 2021 due to COVID. But the real steep increase from the start of 2022, from about 1.5% up to over 4%, that did cause lots of market volatility in the first half of 2022, and losses in most asset classes actually. So the 10-year bond rate is still at, relatively attractive levels. The yield up above 3.5%, but it's come back down to from below 4% to 3.25% or around those levels. Still a very good return that we're getting from bonds now compared to what we were getting back a few years back. And with the bond rate reducing from 4%, or the bond yield reducing from 4% to around 3%, we've seen a rise in the price of bonds because you have that inverse relationship. We just have a quick look at the Australian share market. This is a 5-year return. And I guess there was a big fall for COVID. We've seen that before, like almost a 40% fall in 20 trading days back in 2020. But then we saw the market recover through till about September 2021, and then it's been pretty volatile since then. In 2022, we saw a 10% fall, then a recovery, then a 15% fall, and then a bit of a recovery, and then another fall into September. But from September through to about February, you saw a 17% rise in the market. We're a bit below that point at the moment. And we don't know what the future will hold. We've still got inflation in the economy. The Reserve banks still seem fairly keen to get on top of that, so we may see some more rate rises. But anyway, that's the Australian share market over the past 5 years. If you've got any questions, of course, please feel free to give us a call or send us an email. And thank you for listening.